Is the US on the verge of embracing a digital dollar? Back in March 2022, President Joe Biden took a significant step by signing an executive order, tasking the Office of Science and Technology Policy to thoroughly investigate the potential benefits and risks of introducing a digital currency on American soil. Today, on Finance Homefront, we're delving deep into a transformative topic that's reshaping our financial landscape: the digital dollar. While its convenience is touted, it carries a range of potential dangers we all must be aware of. I'm Bev, and I'll be your guide as we uncover the risks and challenges hiding behind the digital dollar, examining how it might reshape our financial world. If you're ready for this exploration, don't forget to hit the like, subscribe, and notification bell icons to support our channel. Now, let's take a look at the uncharted territory of digital currency. In the jargon-filled world of Washington, D.C., this digital dollar is often called a CBDC, short for Central Bank Digital Currency. Essentially, it would be a virtual version of the physical cash you carry, resembling a government-backed version of cryptocurrencies like Bitcoin. The presidential executive order is not the first time the government has considered the idea of adopting digital currency. A few months after Biden's order, the New York Federal Reserve initiated a 12-week program to test a simulated digital dollar using data. Proponents of CBDCs argue that they can make banking services more affordable, convenient, and accessible for all Americans. On the flip side, critics raise concerns about privacy issues and the potential concentration of power in the hands of the federal government. So, what exactly is a digital dollar? It would be a type of official currency in the US that could be used for transactions, settling debts, and purchasing goods and services. However, unlike physical cash, it would only exist in virtual form, traded online through computer networks, resembling cryptocurrencies but controlled by the government. The current trend is moving away from physical cash towards digital transactions, facilitated by credit cards, debit cards, and payment apps. However, a digital dollar would function differently. Instead of each bank having its own system for transactions, a digital dollar would likely have a centralized system managed by the Federal Reserve or another government entity. In a recent discussion on the dangers of a central bank digital currency, Monica Crowley, a former United States Assistant Secretary of the Treasury for Public Affairs, sheds light on the profound risks associated with a potential shift towards a cashless society. While the convenience of digital transactions is touted, the true objective, according to Crowley, is to eliminate hard assets like physical currency and move towards a government-controlled, software-based monetary system. The implications are far-reaching, from forfeiting privacy in financial transactions to a shift in power dynamics. Crowley emphasizes that this move is not merely about modernizing currency. It's a strategic play for control and power. The government's access to every transaction, coupled with the elimination of traditional banks in favor of a centralized Federal Reserve, raises concerns about the extent of government influence over individual financial lives. The push towards a central bank digital currency is likened to the Chinese Communist Party's social credit system, where every transaction becomes a tool for assessing and controlling citizens. Contrasting this with decentralized alternatives like Bitcoin, which champions freedom and individual control, Crowley highlights the imminent danger of government-controlled currency. The ability to control and monitor citizens' financial activities poses a significant threat to economic freedom. She warns that citizens could be penalized or even barred from transactions based on their spending habits or adherence to government-preferred ideologies. As the conversation delves into the broader geopolitical implications, Crowley discusses the potential loss of the dollar's reserve status and the dire economic consequences. With countries considering alternatives to the dollar, the US faces the risk of economic implosion, hyperinflation, and a severe economic downturn akin to the Great Depression. Supporters argue that a digital dollar could significantly benefit consumers, A 2021 survey found that 4.5% of U.S. households are unbanked, meaning they don't have a bank account. A digital dollar could potentially offer fee-free and minimum balance-free accounts, providing digital banking access to all Americans. Moreover, it could reduce or eliminate transaction fees associated with payment transactions, and payments from a digital dollar account could clear instantly, and making them universally accepted. But the risk of being caught up in the ups and downs of digital currencies depends on how speculative the activity is. Stablecoins, often considered less risky, can still be volatile, especially if they lack proper banking. The digital currency market lacks some traditional safeguards, like controls against extreme price swings, making it challenging for firms offering real-time exchanges. Digital currencies, despite being decentralized, rely on a limited set of market participants, like exchanges, which face various challenges. Digital currencies pose concerns about fraud, money laundering, and deceptive practices, even though the overall fraud share globally is not huge. Scams related to cryptocurrencies increased significantly in recent years. Issues like rug pulls and potential illicit activities challenge traditional banking services. Governments worldwide are developing new rules for digital currencies. Regulatory uncertainty and changes can impact the digital currency landscape, requiring attention and additional costs for servicing. On their end, a digital dollar could streamline processes, making it easier to adjust monetary policy, distribute stimulus payments, and process taxes efficiently. However, critics argue that a digital dollar might grant excessive power to the government, potentially leading to increased control over how people spend and save their money. Concerns include restrictions on access to funds, implementation of negative interest rates, automatic tax collection, and even the elimination of physical cash. While some officials, like Fed Chair Jerome Powell, remain non-committal, the Fed is exploring the potential impact of a digital dollar through studies and experiments. The final decision on whether to create a CBDC is still pending. While financial institutions have had a limited role in shaping regulations for digital currencies so far, their involvement may increase in the future, given the cross-jurisdictional nature of digital currency offerings. In the end, the transition to a digital dollar might not be straightforward. Many stakeholders, both domestically and globally, would need assurance that the shift wouldn't destabilize the financial system. So, while a digital dollar might be on the horizon, its full implementation could be years away. What are your thoughts on the digital dollar? Are you for it or against it? Let us know in the comments. Feel free to ask questions. We'll make sure to respond as soon as we can. Please remember that everything discussed in this video is not financial advice. Make sure to consult with a professional or conduct extensive research before taking on any financial decisions. If you found this video insightful, please go ahead and hit the like button, subscribe to our channel so you can be part of our thriving community, and click the notification bell to stay up to date on all things finance. Thanks for watching!